Typically, we wouldn't be too fussed about India as an exporter. They're not generally a major exporter of wheat around the world. But as alluded to in the previous section, we've lost Ukraine as a supplier of grains for largely about maybe 8 million tons this year, possibly if the conflict still continues. And so about a month and a half ago, we were looking at India being a major supplier to the world, and some of the expectations were above 10 million tons. In commodity markets, and especially grains, things can switch very quickly. And a large heat wave has hit India, and they have done what is effectively a ban on exports, with a couple of caveats in there that are quite important.
We just heard from the conversation that our colleague Sylvia was having on the ground there in Paris, from the outskirts, from the United States Trade Representative, effectively talking about a role for the WTO here. We know that WTO has ruled on a number of various wheat cases over the years. Is there a role, as we now consider that there's a scramble for these soft commodity assets, for some sort of regulation or intervention from the WTO?
Look, I think in this year we are going to be saddled with very high prices for grains, which is a staple for many parts of the world, more so the developing world, North Africa, the Middle East. But there is enough food around the world to feed everyone. There's enough calories around the world to feed everyone. It's just in the wrong places. And I think some form of intervention to ensure that food is able to move freely and without barriers would be beneficial to the general population of the world. So we'll have to see what happens there. But like I say, it's a very, very big change in 1 month to go from 10 million tons to effectively zero. However, I mentioned the caveat there in that the Indian government have said that they will still allow exports if it is for food security purposes. And in the last couple of hours, there has been a confirmation that they will be sending 500,000 tons of wheat to Egypt, and Egypt is the largest importer of wheat in the world, and that is beyond the export ban. So they are still going to be doing exports. I just think the volumes are going to be curtailed, and the reality was that there was a lot of skepticism about whether they could actually achieve that 10 to 14 million ton forecasts that were sort of previously out there in late March and early April.
Andrew, we've had a lot of conversations over the last several months about ESG and effectively how we need to tackle the food system. And one of the big takeaway messages is that a lot of farmers, those at the forefront of production, need to be paid more to try and stop some of the inequality that we've seen over the recent years. But now we've got a situation where prices are higher, and presumably some of that is feeding through to the front line, to those farmers who are making the product too. But yet it's exacerbating a crisis in another area. You talk about some of the developing parts of the world. Is this almost a scene setter for down the track when we do see higher prices paid right across the food system?
Look, these prices are really driven by, I guess, the invasion of Ukraine, which has put a floor in the market. But we are seeing a whole bunch of other fundamental factors. We're seeing dry conditions in the US, poor conditions in China. France is looking pretty bad. Australia is probably the only place, apart from Russia and Ukraine, that from a fundamental production point of view, that is actually looking good. So I don't think this is the new. Once things start getting sorted, we'll start to see prices reflect normal conditions. The reality is, though, that this is not necessarily flowing through to expanded or not massively expanded margins for a lot of farmers around the world. Because we have the outputs, the grain price, but we also have the inputs. So around the world, especially in developing world, we're suffering through extremely high labor costs. But everywhere in the world is facing high diesel costs with the increase in crude oil, the increase in fertilizer prices at record levels, and chemical prices at record levels. So a lot of farmers are, whilst happy that they're receiving stronger prices, they're not necessarily making massive amounts more money than they previously would have done, because there is a little bit of a cost price squeeze occurring because the cost of inputs is starting to ratchet up and swallow some of that potential margins. So it's not quite as simple as grain prices are high, farmers are doing well, and that is a concern that we have ongoing, is that if these input crises remain high and margins aren't particularly strong, well, what if farmers decide to start rationing their demand by using less fertilizers? And we need fertilizers to produce a lot of food. Or if they decide to leave fields fallow or empty and don't produce anything. So we need to have a balance between the cost of inputs and the cost of the outputs to ensure that farmers continue to produce enough food for the world.